What's up, everybody? Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Saturday, everybody. I hope you're all having a relaxing end to the week. This week, new official data published by the Assets Management Association of China, AMAC, showed that money raised by newly launched private funds in China collapsed 44% in January month on month, in what one analyst described as evidence of rapidly shrinking risk appetite amid a slowing economy and rising geopolitical tensions. I would agree, and the trend is very similar to what we have seen with mutual funds over the last 2 months as well. In the mutual fund space, for example, according to recent research from fund consultancy ZBen, B-E-N Advisors, fundraising slumped 61% in January month on month. That's an astonishing 76% drop year on year. So the market is living in a very different environment now versus just 12 months ago. Now back to the new funds. According to AMAC, newly registered private funds totaling 95.9 billion RMB, 15.16 billion US dollars, were seen in January. Very low levels by Chinese standards. The number of new products that invest in stocks and bonds dropped an incredible 50%. Private equity is down 25%, and venture capital fundraising fell 17%. Analysts at Reuters expressed, quote, "China's stock market has been hit by economic headwinds, a regulatory crackdown on the technology sector, and uncertainty stemming from US monetary tightening. The rapid escalation in the Russia-Ukraine crisis will only worsen investor anxiety." End quote. Those of us here on China Update, of course, have seen this coming for months now. Continuing with other financial updates, this week Chinese state-owned property company State Grid confirmed that one of its units sold its 19.9% stake in Australian electricity and gas distribution company AusNet Services Limited to a consortium led by Canadian company Brookfield Asset Management for 1.79 billion Australian dollars, approximately 1.3 billion US dollars. That is twice what it paid in 2013, selling at a price of 2.65 Australian dollars, 1.91 US dollars per share. State Grid has assets all around the world, including in South America and in Europe. According to Caixin Media, State Grid set a global strategy in 2004, aiming to enter the overseas power transmission and distribution market through equity investments, project bidding, and other means. Chinese PC maker Lenovo Group Limited reported record quarterly revenue and profits, allowing it to maintain its position as the world's number 2 PC maker. The company has enjoyed a large windfall due to the number of people working from home during the years-long pandemic. CEO Yang Yuanqing, in an earnings call this week, expressed that demand for commercial PCs increased at the third highest rate of growth since 1998 in the fourth quarter of last year. In the 3 months through December of last year, net profit attributable to shareholders jumped 62% year on year to 640 million US dollars, beating Wall Street analysts' average estimate of 560 million US dollars. Nearly 84% of quarterly revenue came from the sales of PCs, tablets, smartphones, and other smart devices, up 16% year on year to 17.6 billion US dollars. Now, there is a lot of attention on the Ukraine crisis this week, of course. My expertise is in China, my experience is in China, and this channel is called China Update. So while Ukraine is incredibly important to discuss right now, the scope of our discussions here on this channel will be restricted to Ukraine matters as they relate to China and the broader Russo-Chinese relationship. General Secretary Xi Jinping had a phone conversation with Russian leader Vladimir Putin yesterday, Friday. According to state media, the Chinese leader, Xi, expressed support for a negotiated resolution to the Ukraine crisis. The thrust of the state media coverage was on Putin's claims that the US and NATO have long ignored Russia's reasonable security concerns, this is the language of the state-run media, not me, over the military alliance's eastward expansion, which has crossed a strategic red line for the country. but that, quote, still, Russia is willing to launch high-level talks with the Ukrainian side, end quote. Xi Jinping expressed, quote, China is willing to work with all parties in the international community to advocate a common, comprehensive, cooperative, and sustainable security concept and firmly safeguard the international system with the United Nations at its core, end quote. We can see here with the framing by state media the very nature of China's impossible strategic trinity of policy objectives. We will touch on this and unpack it a bit more shortly. Meanwhile, China has been arranging the evacuation of its citizens from Ukraine. Taishan media reports that the Chinese embassy in Kiev issued a statement Friday telling Chinese nationals who wish to leave the country to register by Sunday for chartered flights. The embassy said there are approximately 6,000 Chinese nationals in the country, mostly in the large urban centers. I think it is worth reiterating China's Ukraine dilemma, which we unpacked yesterday. This is analysis from Evan Feigenbaum, Vice President for Studies at the Carnegie Endowment for World Peace. With the Russian invasion, Beijing is trying to strike an impossible balance by seeking to pursue three goals simultaneously: a strategic partnership with Russia, commitment to long-standing foreign policy principles of territorial integrity and non-interference, and a desire to minimize collateral damage from EU and US sanctions. Beijing cannot reconcile these three competing objectives, however. With the Ukraine crisis, Beijing faces unusually stark contradictions, and it will find these contradictions almost impossible to balance. It will pay a cost with the transatlantic West for its lean towards Moscow. It will pay a cost too for breaking with Moscow. China cannot avoid making choices, and these will decisively shape Chinese foreign policy for at least the next decade. And last up, we continue following the housing market, the property sector in China, and the Evergrande Housing Crisis. If you guys are enjoying the episode, don't forget to hit the like button. And if you're watching for the first time and you're enjoying the content too, maybe consider subscribing. We have one of these every day. You'll have the most up-to-date analysis on China. This week we learned that Evergrande sold its stake in a residential development in Chongqing in the Chinese southwest and Dongguan near Canton in the south to Everbright Trust for 1.03 billion RMB, as well as those in a housing project in Foshan, also near Canton, and a theme park development in Guangzhou to Min Metals Trust for 1.1 billion RMB. The trust firms which will be responsible for the construction and delivery of properties to home buyers are part of China's so-called shadow banking sector. Along with selling the stake, Evergrande also passed the right to debt, which means that the buyers take on debt linked to the project. According to Chinese financial media outlet Yicai, with the sales, Evergrande can recover around 1.95 billion RMB of the initial capital contributed and settle around 7 billion RMB of liabilities in the projects. The sale is part of a growing trend which we have been anticipating for months now. State-owned enterprises and trusts being pushed to acquire assets from cash-strapped private developers in order to finish the projects themselves. Meanwhile, Shimao Group, a property developer we have been discussing a lot recently, has had a very eventful week, and not in a good way. Let's recap the last few days with the developer. According to Bloomberg's Hong Kong unit, Shimao Group Holdings Limited missed some trust payments and hasn't reached an agreement to extend repayments on about 6 billion RMB, just shy of $950 million of high-yield products with the nation's largest trust firm. As we also covered, Shimao last week told investors that it has about 1.3 billion RMB of these short-term investments due this month, and 4.7 billion RMBs maturing between April and August. Dollar bonds due July of this year fell to below 55 cents on the dollar this week also. Not a very good sign for a developer that many in the market considered one of the more healthy firms. We also covered Shimao's Moody ratings drop to CAA1 on Wednesday due to liquidity risks over the next year. The Financial Times reports also that on Wednesday, the developer said holders of a 1.08 billion RMB asset-backed note will meet next week as it may not be repaid. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.